Hi, my name is Brad Winlaw, and I'm an investment advisor at Green Private Wealth, Harborfront Wealth Management. In today's video, I'm going to teach you about the Registered Disability Savings Plan, or RDSP. So on the agenda today, we're going to go over what is the RDSP. We're going to talk about how you can get the grants and the bonds from the government, when you can make a withdrawal from an RDSP, and one of the most important topics is, will it affect your ODSP payment? I'm going to go over a compounding scenario within an RDSP, and then we'll wrap it up with extra tips. So what is the Registered Disability Savings Plan, or RDSP? Well, it was first announced in the 2007 federal budget, and it became available to Canadians in 2008. So this is an investment account designed to help people with disabilities save for their future financial security. So very similar to an RRSP. To qualify to open the RDSP, you must be 59 or younger, although to get the grants and the bonds, one of the main reasons people open an RDSP, you can only get those until age 49. You must qualify for the disability tax credit. You must be a resident of Canada and have a valid SIN number. So anyone can contribute to the RDSP on behalf of the beneficiary. You can contribute up to $200,000 lifetime to an RDSP. Unlike an RRSP though, contributions are not tax deductible, but the contributions do grow tax deferred until withdrawals are made. And then I'll talk about the taxation of the withdrawals a little further in the video. Contributions can be made up until the year the beneficiary turns 59, and the RDSP can hold investments exactly the same as an RRSP and TFSA. Okay, now we're going to go over grants and bonds to the RDSP. So this is one of the biggest benefits of the RDSP, and why most people open it is because any contribution you make to the RDSP, you will receive matching grants and potentially also receive matching bonds. We're going to go over that in a little more detail on the next slide. You are able to go back 10 years to receive grants and bonds. So that means if you open up the RDSP today, but you qualified for the disability tax credit up to 10 years ago, contributions you make to the plan, you will receive those grants and potentially bonds from 10 years ago retroactive. The maximum retroactive grant you can receive for 1 year is $10,500. So to figure out how much you can contribute and how much carry forward grant and bond you have, CRA will send you out an annual statement of entitlement, and this will detail how much grant room you have available each year. So grants and bonds only received until the year the beneficiary turns 49. Okay, this is one of the most important slides of the video, and the question most people have is, how much you can contribute to an RDSP, and how much matching grant and bond will you receive from making those contributions? So it's a little confusing, but we'll start with the easier of the two, the bonds. So if you look at the first number there on the chart, 36,502, that's the family income for the beneficiary. So if your family income is under this number, you will receive the full $1,000 bond if you make a $1,000 contribution. Once the family income starts getting over this number between 36,502 and 55,867, the bond starts to decrease on a formula CRA uses. Once your family income is over $55,867, you'll no longer receive the bond at all anymore from your contribution. So that's the way the bond works. The second, the more confusing one, is the grant. So you want to focus more on the third number there on the chart. So $111,733 of family income. So if your family income is under this number, the first $500 of contributions you make will be matched 300%, and the next $1,000 of contribution you make will be matched 200%. If your income is above this $111,733, you will just be matched 100%, so dollar for dollar, on the $1,000 contribution you make. So in summary, for the bond, if your income is under 36,502 family income, you'll receive the full matching bond of $1,000. And to get the full matching grant contribution, you have to contribute $1,500, and you will receive the $3,500 maximum grant. So the lifetime maximum bond at the bottom there you'll see is $20,000, and the maximum lifetime grant you can receive is $70,000. So how and when can you make a withdrawal from an RDSP? Well, you must start making withdrawals the year the beneficiary turns 60. And the way the taxing works is all the contributions made to the RDSP, those come out tax-free, but the earnings and growth within the RDSP earned, that will be taxed in the hands of the beneficiary. You are able to withdraw sooner than age 60 at any time, but just note that if you withdraw within 10 years of receiving grant or bond, you're gonna need to repay that back. And the repayment is $3 for every $1 withdrawn, up to the total amount of grant and bond received in the past 10 years. Okay, one of the most important and frequent questions I get asked by clients and people when opening up an RDSP is, will it affect their ODSP payment? So the maximum assets an individual can hold is $40,000, or they're gonna lose their ODSP. So that includes bank accounts, investments, properties, and other types of assets. The good news is the RDSP is not included in this calculation. So this allows Canadians on ODSP and receiving the disability tax credit to save for retirement without having to worry about losing their ODSP. So it's very important. It's a very good account for people on disability to save for retirement. Okay, I want to illustrate an example now of using compounding and investing the contributions, grant, and bonds from the government inside an RDSP, and what it can be worth by age 60 when withdrawals start. So in this particular example on the screen here, I'm assuming it's an 18-year-old contributing the maximum $1,500 per year for 20 years, and they're eligible to receive the maximum matching bond of $1,000 and the maximum grant of $3,500 per year. And I'm also assuming they're going to invest it more in a growth type portfolio where the average rate of return annualized is 7%. So if you look now on the left chart, year one, age 18 at the end of the year, it's already worth $6,420. If we jump ahead to about age 40, that's when contributions have stopped. It's now worth $322,420. And most of the magic's going to happen in the last 20 years, where the compounding and the 7% rate of return really starts to kick in on a larger account. And by age 60, when withdrawals are going to start, the account actually grows to over $1.2 million. So the lesson here is to open the RDSP as soon as you can, as soon as eligible, and get that grant and bond from the government as soon as possible and invest it properly. Okay, some quick extra tips here to wrap up the video. You are able to transfer an existing RESP over to an RDSP if it's unlikely the beneficiary will attend post-secondary school. This will help avoid some potential tax penalties if you have to wind up the RESP. You're going to want to ensure the RDSP is invested correctly in the proper asset allocation. It's important you talk to a financial advisor before setting up an RDSP. And finally, you can call 1-866-754-2674 for more information on the RDSPs, and they will be able to give you the exact grant and bond room you have carry forward, or how much you can contribute in the current year to get the maximum matching grant and bond. So that wraps up the video. I appreciate the time, and again, if you have any questions, please give us a call at Green Private Wealth. Thanks.